Hello, everyone. Welcome to Wall Street from Main Street podcast. My name is Mo, and today the returning guest is Adam B Levine, the editor of Let's Talk Bitcoin. Adam, thank you for coming back.
Mo, thanks for having me.
All right, Adam. So tomorrow, July 9th, a big event regarding Bitcoin. Something, well, in layman term, they're going to cut the supply in half. So could you just explain to people out there how are they going to do it and why are they doing it?
Sure. So one of the things that attracted me to Bitcoin initially is that it has a long-term monetary plan that's effectively laid out in the code, right? And this is a part of the code that would be very, very difficult to change. It would take consensus from, or you'd have to walk away from a lot of money, basically, in order to change this. And so part of getting to that initial 21 million part of getting to that eventual 21 million supply of Bitcoins is this 4-year halving process. So every 4 years, the amount of Bitcoin that is awarded each 10 minutes to miners gets cut in half. And so when I was very first getting interested in Bitcoin back in 2012, this was an event that happened, I believe it was the end of November 2012. And the reward at first, when Bitcoin initially came out, was 50 Bitcoins per block. But then after this event, it was only 25 Bitcoins per block. And so for the last 4 years, it's a little less than 4 years, about 3.5, we've had this paradigm where it's 25 Bitcoins are awarded to whoever the miner is that finds the block every 10 minutes on average. And so what's happening in it looks like about 12 hours from now, from when we're recording this, is that amount will be going from 25 Bitcoin down to 12.5. And then 4 years-ish in the future, it'll get cut to 6.25 Bitcoin.
Okay, so that's interesting there. And why are they doing this, basically? There's too much supply of Bitcoin out there, or they're just trying to keep it under control?
Yeah, so this is a schedule that was set out at the very beginning, and it's actually it's just a part of the system at a fundamental level. So this is happening not necessarily because there's any need for it to happen, like not any short-term need. It's happening because this is how the monetary policy actually works in a cryptocurrency like this, is rather than relying on like a Fed governor board or something like that to meet every 3 months and then decide what's best for the currency going on. Instead, you have this system that is effectively set out well in advance and is transparent so that players within the market, participants within the market at an individual level can look ahead and say, aha, this is what the situation will be in 8 years, in 100 years. And so therefore I can make some assumptions that these things will still be true. And so again, like that's the really interesting part about this. So again, just to answer your question, it's happening because it's scheduled to happen, and really that's the only reason.
So what effect is that going to have for people that are using Bitcoin for transaction or anything else?
In theory, this should have almost no effect on people. There's a lot of anticipation, I think, that we're going to see price increases because people have this kind of simplistic model of supply and demand in their head where, well, if the supply of Bitcoin that's released every 10 minutes is going down by half, then therefore the price must go up because demand will be staying the same, or this won't impact demand negatively. So you can build kind of a terrible model that can convince yourself that it's going to go up, but you have to keep in mind that markets are forward pricing mechanisms. So they try to take all of this information, and then the price is a representation of what the future value they think will be, the market thinks will be, as kind of a whole, as opposed to trying to be an accurate price now. So people who are assuming price increases, I think, might be disappointed because a lot of these things happen in advance of the actual event happening. But for the average user who's not trying to speculate on the price, this basically has zero effect.
Yeah, I mean, past month or so, the price of Bitcoin has skyrocketed, and I read a couple articles and videos saying that the high demand in China has caused the prices to go parabolic almost, and it's still holding on pretty well. So it'd be interesting to see what happened after tomorrow's event. What happened to the price of Bitcoin? A lot of people are speculating that it will continue to go up after they cut the supply in half.
Yeah. My expectation is that with any of these systems, you have to appreciate that things don't happen quickly. They happen slowly, and if things do happen quickly, it's not that the event has occurred and changed things fundamentally. It's that the perception of the entire system, the perception of the value has changed, either for the better or the worse, and that's what causes these kind of fast movements. So the system itself moves very, very slowly and predictably. Really, what we're looking at when we're talking about markets is how people are reacting to that. So it's just something kind of interesting to keep in mind.
Did you happen to know why there's a sudden demand for Bitcoin in China so quickly over the past couple of months? I was assuming that China, the people in China, have been main users of Bitcoin more so than people in the U.S.
One of the things that I've discovered through my time, working with the Let's Talk Bitcoin project and doing a rewards program is that national geographic values matter, right? So if you have a country like a developed country in the Western world, then someone there values their time at a much higher level and demands a greater kind of percentage of profit in any sort of thing they're going to engage in order to really justify doing that. But you go to Eastern Europe, you go to parts of Asia, and that's really not true. You have people there who have a much different idea of value and who are willing to use their time for things that generate much lower amounts than someone in the Western world would be willing to kind of do. I think that that's what happens fundamentally with Bitcoin. I think that Bitcoin offers a lot of incremental optimization opportunities that you can make money at, and so whether it's day trading or mining or any of these other things, I think that's been attractive, not just to China. China's just a concentration, but this is any place that's internet connected but has a low value, a low local value system relative to the Western world, which is really what you're competing with when you're talking about kind of the Bitcoin space. Yeah, pretty much.
I think the surge in demand for Bitcoin comes from the Chinese government attempt to enforce capital control on their citizens because they made a rule that no individual will be allowed to move more than $50,000 out of the country in any given years. So I think people just switch to Bitcoin to try to make transactions after they implement that capital control, which causes the price to spike up.
I don't necessarily disagree with that, but again, any of these places where it's being used to route around capital controls is sort of a losing strategy because there's the ability to triangulate based on IP address, right? You can actually track down users of Bitcoin if you have enough control over the network. So things that are happening within China, that's entirely going through the Chinese government's net. So anything that's happening there, if they want to, they can correlate that stuff. So I agree with you. I think that that's the perception a lot of times is that people are using it for capital flight. But I really think that I see that so infrequently. So infrequently do people actually talk about real use cases where that's happening, and so often it's the excitement of the story which can add value to the Bitcoin story or whatever the cryptocurrency is. That's the real thing that's driving the markets. Because at a fundamental level, it's still quite difficult to get any sort of money into the Bitcoin ecosystem, whether you're talking about China or you're talking about the U.S. To do it in a legally compliant way is difficult, and to do it outside of that is dangerous. So this isn't to say that people don't do it. It's just to say that I'm not convinced that that's the driver of the price. Yeah.
So let's talk about how Bitcoin has been and their role in cryptocurrency space. The past couple of years, a lot of people are speculating that Bitcoin won't be around after a decade or so. A lot of people say that because first it's a pioneer, and a lot of pioneers' products or ideas are the first one to fail. And secondly, there's a lot of competition out there as well. So what do you say to people that are speculating that it won't be around for a while?
I think that there's very little chance, actually, that Bitcoin won't be around for a long while. I think that it's already, to a large degree, won the race as far as the role that it's taken, which I think will become increasingly over time a kind of reserve asset that's used to give unassailable value to other types of systems that will emerge over time that make use of this technology, but in fundamentally different types of applications. So I'm not saying that Bitcoin is the exclusive token or token system that winds up getting used. I think we will see several And I think that increasingly we will see these types of systems replacing the types of systems that we've known. And, we haven't talked about the macro environment and all, but that really is what's the driver here. Cryptocurrency is fundamentally less efficient in a lot of ways unless you don't trust the power structure that deals with currency. And you look around the world, and we talked about this the first time we talked, Mo, the world is what's driving Bitcoin as a meaningful use case, because if things made sense and if central banks around the world or governments around the world were acting responsibly, then there wouldn't be a use case to have trustless money where you don't have to trust your government, because everyone would be fine trusting our government. The governments are supposed to be us. So it's only kind of this sort of weird, sideways scenario that we found ourselves in, where Bitcoin even sounds like a good idea and not just a huge amount of redundancy for something that we can more easily do with a trusted structure. So that's the macro situation overall, but that's also the kind of wild card about it is that the future of the system, whether it continues to make good decisions or continues to make bad decisions, is what's going to drive the Bitcoin story. The technology is useful, but again, if we ever get back to a time, if in the next 5 years we get back to a time where suddenly there's trust in institutions, and where many of these core problems that we have with just the ways that our lives are governed right now get resolved, at least in the minds of the people who feel like they're problems, then you would see kind of a pushback. But otherwise, I think we're on this same kind of steady trajectory towards it. And it doesn't really matter if it's Bitcoin or it's Ethereum or it's something else. All of them are solutions if and when the current system fails, because that seems to be what we're going to. It seems that everything is about wrapping up risk into larger and larger and larger packages, because any individual failures can't be allowed. So we've seen this, we saw it with banking first, and just the other day we've now seen it with kind of the Hillary Clinton situation, where they're sort of having to contort the legal system and kind of at a fundamental level compromise precedents that have just been sort of assumed to be, things that you don't do. But again, if you have this worldview that this is all just like trying to wrap up larger and larger and larger bundles of control, then it actually all does actually make quite a bit of sense. And in that worldview, which is, I admit, somewhat fringe, Bitcoin and cryptocurrency, it doesn't matter what it is. It just matters that there are alternatives.
And I agree with you. Bitcoin and other cryptocurrencies were created as a result of the governments around the world getting involved in currency wars, where they debase their own currencies, through money printing in an effort to stimulate their economy. And so far, it hasn't been working well, and also destroying the wealth of the middle class all around the world. And as a result, somebody came out with an alternative currency that will, other than gold and silver, that also protects your wealth. But with Bitcoin, you can make a transaction a lot faster compared to fiat currency and using gold and silver. So yeah, I think cryptocurrencies will be here to stay. I don't know about Bitcoin, and also another cryptocurrency that's on the rise is Ethereum, or Ether. Could you give us a background on that cryptocurrency for people that have never heard of it?
Yeah, absolutely. So when I was first getting involved with Bitcoin and first starting the Let's Talk Bitcoin show, I met a guy named Vitalik Buterin, who was at the time, I think, about 19. Actually, he might have been 18. Anyways, he was very young. He was very young. And he was writing for a really early Bitcoin publication, and I forget what the publication was called. Maybe like the Bitcoin
I think it's called Bitcoin Magazine.
No, that came later. He's actually a part owner of Bitcoin Magazine, and Bitcoin Magazine is still going on. But this early one was like the old days of the internet, right, where everything is grayscale and like there's no design whatsoever. And so the first project, the way that I met him was he would write articles for this publication, and then they would post it to the only Bitcoin place people talked about Bitcoin, which was the Bitcoin forums, way back in the day. And the deal was that you could read the first paragraph of the article, but if you wanted to read the whole thing, then there was like a total amount of like maybe $30 worth of Bitcoin. So that would have been like 10 Bitcoin at the time. So like $30 worth of Bitcoin that had to be donated by a total of people, right? So one person could give $30 or 30 people could give $1, and I was like, oh, that's really cool. This is a really neat mechanism. And I started following him at that point. I met him at a conference a couple of times. But anyways, the point is that there was this idea bouncing around in the cryptocurrency space that Bitcoin has this language that allows you to do things with it in an automated fashion. So you can create software that will automatically send and receive Bitcoin payments for you. And that's really powerful. But Bitcoin is really specific in what it allows you to do. There are only a couple of different, very specifically defined, you could call them verbs, that you can actually do in the Bitcoin system. And so Vitalik's idea with Ethereum was to take the distributed consensus, right? So you take the ledger part that lives on everybody's computer, and so it's uncensorable, but you add to that the complexity of a simple computer. And so a simple computer, instead of having, this is a send transaction, right? Instead of that being like a button that you press, instead over here you write a program that tells the computer how to send it at a very deep level, right? And so because of that depth, rather than the simplicity of something like Bitcoin, with the depth, you can do just about anything, like literally anything, like arbitrarily complex. You could do Rube Goldberg machines. You could design a nuclear reactor with it, whatever you wanted, given enough time. But the problem with that, so I won't jump ahead in the story. So that's, of course, a really powerful idea, the idea that you can effectively automate relationships, put a computer online, make it so it can't be censored, can't be shut down by anybody, and so that it runs collaboratively in a way that pays people just like Bitcoin mining does. Bitcoin mining pays people to process transactions and to move these funds around. And Ethereum pays people to run this code on their computer and then push it back up to the big distributed computer that is effectively Ethereum. So they designed this project and funded it, and the team that they put together, I was involved in kind of the early preparatory stages, but did not get involved with the project because I was keeping my neutrality more at that point. And so it was really awesome to see this project come together because it had just tons of really smart people. All of like the smartest people from lots of different projects within the Bitcoin space were kind of intrigued by this idea, and Vitalik did a good job of kind of putting it together and building a team. Most of it wasn't just him. He was kind of the founder and the instigator for the idea, but there was a really robust team working behind the scenes, and they wound up having something like 20, 30 people involved with the project pre-getting any sort of funding. And so unlike Bitcoin, right? Bitcoin, one of the things you mentioned about Bitcoin, in that, like, it might go away is that it has no founder. Well, depending on who you ask, that's actually an advantage that Bitcoin has over Ethereum. And I, again, won't skip ahead, but that comes up later. So Ethereum, a couple of years ago now, I guess about a year and a half ago, raised about $26 million at the time, and had more than 100 people very quickly working on this project and building out various things. And so unlike Bitcoin, which still only has one like main implementation of what a Bitcoin client looks like, Ethereum was like, well, we're going to be more accessible, and so they have many. And so again, if you look at the projects, you can basically say that where Bitcoin is limited, powerful, but simple, you could say Ethereum is unlimited, very, very, very powerful, potentially, as powerful as one could possibly imagine, and arbitrarily complex, where the more powerful you are, the more complex you are. And so they occupy the same type of space in that they're both cryptocurrencies at a fundamental level. They both use distributed ledgers. They both put copies of everything they're doing onto every participant's computer who's performing that kind of mining process. But they're very different in what they're attempting to do. Bitcoin just wants to be the simple payment network, and it wants to do that fast and cleanly. And Ethereum wants to give the possibilities of kind of everything. And it wants to do that fast and cleanly too, but it's harder because you're trying to do more. So that's kind of a basic overview. And the next part kind of gets into the conversation about the DAO, which I'm not sure if you want to get into or if your listeners are interested.
Yeah, definitely. That was actually my next topic for discussion, the DAO, because I think a month ago, they had a security issue with Ether that caused the price to drop dramatically overnight. So let's talk about that.
Yeah. So I said that Ethereum raised like $26 million, right? So they raised $26 million by selling Ether, which is the Bitcoin, the lowercase b Bitcoin equivalent to the Ethereum network, right? So in order to send a transaction on the Bitcoin network, you need some Bitcoin. In order to send a transaction or do something on the Ethereum network, you need some Ether. So they pre-sold this effectively, giving it to people who gave them Bitcoin that they then used to fund the project. And when the token came out, it started off at, it was definitely a premium to people who had purchased it was a higher price compared to people who had purchased, during the sale, but it went up several orders of magnitude in price over last winter. And so what that meant basically is that this initial $26 million, even though the $26 million was spent, it generated tokens for the people who had put in it that were an order of magnitude more money. So you have literally hundreds of millions of dollars now in the hands of people who gave the money to Ethereum up front. And so the DAO, let's back up a second. What is a DAO? DAO stands for Distributed Autonomous Organization, and it's a derivative of a concept that we've been talking about for several years called Distributed Autonomous Corporations. The organization move is an attempt essentially to dodge legal stuff because a corporation falls on, so anyways, that's why the name has been changed, but we've been talking about it now for several years as a Distributed Autonomous Corporation. So the idea here is that you could have a company where everything about it is automated except the actual work that's being done. So all of the structure, all of the management, all of the accounts and kind of governance controls, all of that could be controlled with automation in what's called a smart contract that would then live on the Ethereum network. So that's the idea here. And so the DAO is that concept applied to an investment vehicle. And the idea is that you have this basically autonomous investment vehicle where people put money in the form of Ether, and then they get back tokens that are called the DAO tokens. And the DAO tokens allow them to vote on proposals to be funded by the DAO in Ether. And then based on how successful those projects are, that money goes back into the DAO and it goes back to the people who paid that Ether in. And so that's the idea basically, is that there's nobody in charge of the DAO. It's not a real legal structure. And one of the things that was really interesting in it is that in the investment documents, they go out of their way to say that there is no legal jurisdiction for this thing. There is no formal company that is doing this. It is merely this smart contract, right? The smart contract, the code is the law. And so this is something that has then come back to bite them quite seriously in the butt. So the vehicle was intended to raise about $500,000 worth of value. It was intended to raise this that would then be used by a company called Slockit that's working on a smart lock project. And they were the company that also built this DAO project. But the concept became very, very popular because, again, these people had all this money, right? They had all this money because they had invested in Ether, and then the Ether had returned exponentially for them. And so many of them were like, well, yeah, I'll get in on the next thing. And so more than $200 million worth of value, worth of Ether, and more than 10% of the total supply of the Ether token found its way in a very short period of time into this fund. And so this first of kind, right? It's the first time anybody's ever done a DAO, really, much less an investment DAO. And it was intended and intended to work with maybe $500,000 or $1 million, and it has now 200 times that in it. And so this is the situation that kind of the community found itself in when it was discovered that there was actually a problem with the code of the DAO. And one of the features that was meant to make it so that it was safe, there was actually a feature built in that made it so that if you put your money into the DAO, but then you decided at a later point that you'd like to take your money out, actually, and you don't actually want to participate, you could do that with a feature called splitting. And I'm not going to get into the technical details, but basically what happened is there was a very obscure way that somebody could essentially withdraw, split their value off without actually giving back the token that represented it. And so they could use those same tokens to withdraw that same amount over and over and over and over and over again. And because this is not a company, right, because this wasn't a bank account or anything like that, but it's actually a censorship-resistant transaction network and a censorship-resistant smart contract execution network, there was really not that much that anybody could do about it. And so what kind of happened then is the good guys in this, the people who are running the DAO, acting on behalf of the people who put money into the DAO, are basically trying to steal back the money from the guy that stole it with this thing. And it's going back. It's kind of like one can imagine like the Benny Hill music playing in the background, right? As these people are chasing each other around through two sets of open doors. So that's kind of what's happened now. And the real thing about it that I think has caused The assumption with smart contracts and the assumption with Ethereum, at least for me, and I don't want to speak for everybody here, but my thoughts on it have for a long time been that the people who will find smart contracts most useful are people who cannot afford lawyers and cannot afford the types of like observation and automation you would need in order to do very small things, right? So like small contracts between people. If you don't need to hire a lawyer for $100, to put together a basic contract for you, but you could have an automated contract that you just customized a couple of names on and it costs you 25 cents, and the execution of it is automated based on like a search results, right? Like, so a will that triggers when somebody dies, for example, right? And they die because they show up in so many obituaries or and a drop-dead email stops being responded to or something like that. You can set up these kind of situations that normally would require you to have a lawyer basically on retainer, and instead it can cost you pennies. And so that's the thought, is that the thought was that that smart contracts would be used primarily for legal, low-value stuff. But what really became clear to me as I've been watching this thing with the DAO is that actually the person who benefited the most in this circumstance, at least, is the person who is stealing the money. Because in a normal situation, they would be protected by multiple layers of both corporate, legal, and the kind of finance system structure where you have all of these reversible things. But because it's an uncensorable cryptocurrency network, what's happening is that in order to try to fix the problem, the Ethereum community as a whole is kind of ripping itself apart, trying to, basically arguing, do we let the person who took this effectively, wreck some of our future scaling plans, or do we fundamentally, go back on what we said, which is that this is a censorship-resistant network where you can't have this sort of retroactive action, right? You can't go in and just say, oh, well, this person morally stole something, right? It's not supposed to work like that. A censorship-resistant network is supposed to take anything that comes in so long as it complies with the rules of the network, which means paying the fee. So it's a long way of saying that things are a mess. The first smart contracts platform is right now in the middle of a very major crisis. I don't really know what's going to happen with it. I don't think this is catastrophic in the way that some people are talking about, but I think it does fundamentally mean that we both have to slow down a lot in terms of how fast we're moving with some of these contracts and recognize I'm not the first person to say this, and this is not an original thought, but essentially recognize that when you're building a smart contract, it's much more like, the type of operating system that would run a nuclear, power plant than it is a JavaScript application or something that would go on your phone, right? Because once you have these parameters locked in place, you can't fix it, and things can't be undone. And the other thing that's come out of this is that, we have to go slow on this stuff. The types of vehicles that were designed right now, this is not even that complex, right? As types of things that will eventually be done with this technology go, a simple investment vehicle where people can vote on projects is actually not that complicated of a thing. And yet, it still had this weakness that after multiple reviews weren't able to be found simply because it's complex and it's a new space. So I'm very hopeful for smart contracts in the long term. But I think that initially there's a lot of danger here, and they're very, very unsafe investments as far as, even compared to cryptocurrency. Smart contracts and projects that rely entirely on them are the most speculative things right now.
And Ether is relatively new cryptocurrencies, and so it's expected that setback was going to happen, right?
Yeah, totally. It's just, with any of these things that have a lot of market expectation associated with them, and one of the things that differentiates Ethereum from other projects is they've done just a fantastic job of business development. They've gotten most of the corporate technology companies on board doing either pilot projects or just even co-branding stuff. It's been actually pretty amazing to watch. And I think that if you look at the project objectively, that is their biggest success and the biggest component of why they have gotten so far and done so well. It's just because they've absolutely captured the imagination, not just of the cryptocurrency community, but of the broader tech community as well. So, this is totally expected. But I see over and over again when I talk to people who are either working in kind of Ethereum smart contracts or people who are interested in Ethereum smart contracts, people think we're way further ahead than we actually are. We're actually quite early in this technology. Things are not stable. You know, with any project I'm working on, like, we cap any sort of participation that could potentially happen at 30,000 users because you just can't really scale past that at this point. So that's where we are. You know, the technology's new. It's very exciting, but we can't let kind of our eyes get bigger than our plate on all of this stuff because there's just so much danger associated with it, and especially with these investment type things, which I personally stay away from and recommend everybody else does. It's really dangerous, and you can't tell looking inside, from outside, right? If you're just a normal person, you're not going to be able to assess the risk of this whatsoever, and you should just avoid it.
Yeah, it's very speculative right now to buy Ether right now. You don't know what's going to happen, but a lot of promises for this cryptocurrency, and a lot of people think it's going to give Bitcoin some competition. Do you agree with that?
I think that there's a lot, depending on how Bitcoin handles scaling. There are lots of different solutions for making it either less expensive or just easier to get a lot of transactions onto the blockchain, which will allow for kind of bigger use cases to come into play. So I think that if that doesn't get addressed in an adequate fashion, then Ethereum could have an advantage in the short term because the perception is going to be a problem, and Ethereum really doesn't have that much stuff going on their blockchain yet, where Bitcoin really is heavily being used. But in the long term, actually Ethereum has a scaling problem that's about 10 times as bad as Bitcoin. It's just an issue that it's not being used as much. So I think that they do different things. And if one succeeds, both will succeed. And if one fails, then one of them might pick up the extra, or it might fail also. I mean, like, it might just be an indication, that the way we've done things to this point has not been right. So it's very hard to predict. But I do think that Ethereum has value, whether or not this thing happens with the DAO. But again, just there's been so much advanced hype packed into that product that it's really hard to look at the markets right now and be like, yeah, I'd be comfortable buying Ethereum at this price. Because, again, if that fundamental use case, right, if it's more useful to people doing illegal stuff than doing legal stuff, then the market for it has shrunk enormously. And, it has this huge optics problem that makes the one that Bitcoin has look kind of like a joke.
Right. Well, it'll be interesting to see what happened with the DAO. After the DAO attack that happened last month and going forward. Well, Adam, thank you for your time. And if people want to find out more about what you do, where can they go?
I do the Let's Talk Bitcoin show. We're about to release episode 300. So that's at letstalkbitcoin.com. And then I'm the CEO of a company called Tokenly that basically is helping companies that are outside of cryptocurrency use cryptocurrency without having to learn about it necessarily or having to do any of the cryptocurrency stuff. We just provide all the services via API. So you can check that out at tokenly.com. And if anybody would like to email me, the best way to reach me is adam@tokenly.com. Thanks again, Mo.
Oh, thank you, Adam, and congratulations on episode 200.
Thank you very much.